On October 10th, we had one of the biggest crypto liquidation events in history. And since then, the market has been pretty shaky. My portfolio has taken a hit over the last few weeks, and I'm sure yours has too. But if you're in that position like me, I think today's video is really going to help you out because I'm going to be breaking down how I'm structuring my crypto portfolio to recover my losses. This portfolio framework is going to include the exact altcoins from large caps, mid caps, and small caps at the end of the video that I am holding and trading in order to position myself for the next phase in the crypto cycle. If you're new to this channel, my name is Deutscher. I've been in the space for over 6 years. I'm a crypto analyst and investor. I've been through a lot in the space, multiple bull runs, multiple bear markets, losing money, making mistakes, getting hacked, scammed, pretty much everything that happens in crypto I've been through, and I've taken all of that experience to create this channel, Crypto Edge, which takes you through my mindset, my frameworks, and guides to succeed in the crypto market. Then I have my main channel, Deutscher Finance, which covers more of the time-sensitive market news and updates and that sort of thing. So if you like this sort of content, click the subscribe button, hit the post notification bell so you get notified of videos on this channel. Decent chance you're subscribed to my main channel, but not this channel yet. But this channel is extremely valuable because this is where we dive deep into really important concepts in crypto that I don't get a chance to discuss on the other channel. So without further ado, let's get straight into the video. I'll be discussing my recovery portfolio to help you in this next phase in the market. So I guess before we get into the portfolio, it's important to recognize that you do have to make a bit of a decision right now. And that decision is around where you think we sit in the cycle. There is a decent camp of people that are now starting to say that the crypto cycle is over. I think that number is now significantly higher over the top of the last few weeks. There is also another camp which thinks that the market is still going to hit new highs and that we could still see decent gains in the crypto market. The portfolio that I'm structuring for you today kind of gives you the best of both worlds in the sense that it's not super high risk, so it's going to protect you in case the bear market camp is correct, but it's also going to give you exposure to enough upside. So if the cycle is going to continue, you're going to get exposure to the upside. And the way we have constructed things today is going to give you the flexibility to enable you to also capitalize in other ways, aka trading and narrative investing and trading, if the market does end up going really parabolic. Now, I'm still in the second camp that I think Bitcoin is still going to hit a new high this cycle. I've got invalidations on my Bitcoin chart. We've discussed that in other videos and on my altcoin charts in case that isn't the case. But I still think there is enough juice left in the stock market, the business cycle in general, the liquidity cycle, and the real estate cycle, which are all interlinked to see Bitcoin make its final push to new all-time highs, which should result in some traction for the altcoin market. Remember, when Bitcoin goes on a run, typically alts follow, and it's, reflexively the same to the downside. Recently, Bitcoin has been weak, so overall, the market has been weaker. The way I'm going to do this portfolio is starting with the high caps, so, things like Bitcoin, Ethereum, these constitute the majority of your portfolio. Then we're going to go into mid caps. These balance risk rewards. So they do have upside, like potential 2, 3, 4, 5x upside, but they don't have the same downside as the low caps. Then we'll get into the low caps, which give you the opportunity to make a lot of money. But of course, you do want to size them smaller because they come with a lot more risk. And then I'm also going to add in a bonus section at the end, which is pre-TGE, because I think a lot of the best performing projects this cycle probably still haven't launched yet. And if Bitcoin does hit a new high, the new coins that launch around that time can give you quick chances to make multiples in the days or weeks post-launch. Even the new coins that are launching over the next few weeks, because they're launching into weak market conditions, there could be opportunities to pick these projects up because VCs and creators or whoever has invested might be selling at first. You have a chance to actually accumulate these projects before they could potentially make a run. And you could be investing in oversold projects if that's the case. So that's going to be a bonus section at the end because I think it's something underrated that, not a lot of people making these videos are talking about. And at the end of the day, you need to be prepared and have liquidity for new launches because that has been a way to make good money in crypto pretty much since the beginning of crypto. And that doesn't mean aping new launches on day one, but it means keeping an eye on them, knowing how to track the right things, potentially getting involved in airdrop incentive opportunities on those coins, and then trading those coins when they launch. But firstly, let's start with the high caps. This is going to constitute the majors, which make up 70% of the portfolio. Now, you might be thinking this is relatively risk off. That is true because I'm factoring in the case that, we may have hit a cycle top. Now, once again, I don't think that's true, but you have to assign some sort of probability to it, whether it's 10%, 20%, 30%, 40%. 50%. For me, I would say it's around 35%, but you've got to use your own indicators and your own nous to come to that conclusion. So because of that, I'm a little bit heavier in majors than what I have been in other cycles. But if you are really risk on, or you have good income, that can replenish potential losses in the market, or you just have a much higher risk tolerance, you could tweak the percentages a little bit and go like 50% majors and then the rest in mid and small caps. So I'm not against you if you do that. It's your portfolio and it's based on your lifestyle factors that are specific to you investing. So I can't tell you the exact allocations to have, but for me, majors sitting around 70% makes the most sense. So for the majors, we have to talk about Bitcoin. Bitcoin is the leader of the market. And at the end of the day, if you can't outperform Bitcoin in an altcoin, well, what are you doing? You may as well hold Bitcoin because it's lower risk. And if you're getting the same or higher returns, then it's better to just hold Bitcoin. So every altcoin in my portfolio, it's in there because I think it can outperform Bitcoin. If it can't outperform Bitcoin, then it's not in my portfolio. I do think that dominance is probably, balance of probabilities, that is, going to go a little bit more to the upside before we see a rotation, because likely Bitcoin needs to hit a new high until we see another rotation into altcoins. We've had a full reset in the market. We've had a leverage wipeout. We already saw Bitcoin into the ETH treasury narrative, into a bit of hype for Solana. Alts were running a little bit, and then, we had that big reset. So the natural way that the market flows is you see liquidity go back into Bitcoin and then back down into altcoins. So having decent exposure to Bitcoin right now is not a bad idea. And I would actually go so far as to say Bitcoin is probably the better hold for the next few months than the majority of altcoins. Not only are you getting less downside, but you'll likely get the same, if not more upside, which means on a risk adjusted basis, holding Bitcoin could be the better thing to do than altcoins right now. So Bitcoin comes in at a decent allocation. I'm not giving specific allocations for every coin, but I'll give sector allocations. So this entire sector is 70%. The next coin in my majors basket is Ethereum. Now, I've been trading in and out of Ethereum a little bit, so keep in mind, the way I trade isn't like just buying altcoins and holding blindly. Like I have invalidations. I had a partial invalidation below 4K on Ethereum recently. So I'm a little bit more under indexed than I'd usually be. So just remember, this video is a general portfolio. I might not be in every single position at every moment in time. For example, I hold some Ethereum, but I'm a little bit less heavy in Ethereum and heavier in Bitcoin right now. But I'm still putting every coin that I hold some of in this portfolio. And there are even some coins later that I don't have a big position, but I'm putting them in the portfolio because I think if you are building a recovery portfolio from scratch, they deserve a place. So keep in mind that it's not exactly what I'm doing, but I'll try and be as specific as I can throughout the video. ETH should get a run if Bitcoin hits highs. It'll be the next coin in line to get a rotation. The ETH treasury narrative was really hot. It started to cool down. We've started to see some reflexivity to the downside. I think it might be a while until ETH is ready to make that big run, but we have seen in August that when Ethereum does have a run, it actually can run a lot. And I guess it's the leader of the alts. So not only should your alts be outperforming Bitcoin, you should also be tracking your alts against Ethereum. Otherwise, you can just hold Ethereum, which is clearly lower risk than many of the alts. Next is Solana. I like Solana because not only is it the proven L1 bet this cycle, and I've been a big fan. I've held Solana since $12 to $15. Obviously, taken heavy profits along the way, de-risked at times, but I've had, but it's been one of my most successful coins. I like Solana because it also has some ETF traction. So it has the new staking ETF, which launched, and I like the narrative for Solana. Like if you are a big fund manager, investor, or, even retail just looking to get exposure through the stock market into a crypto ETF, you might look at Bitcoin, think it's overvalued. You might look at Ethereum, not necessarily like Ethereum, or, you also might think it's overvalued. The next one that you might go to if you want general exposure to the upside of crypto, the upside of blockchain, something that has real traction, is Solana. And because it has real developers, real community, lots of apps building, I think it becomes a decent pick and shovel for a lot of people like that aren't in crypto and aren't crypto native looking to get exposure. Now, of course, there can be ETFs created for many more coins down the line, but it's not as easy as some people think. You still need to go through the regulatory process that Solana has been through for a long time. And even if you do have ETFs on AVAX and XRP and all these other coins, I still think Solana probably appeals to more of those investor types than some of the other assets in crypto because of the positioning that I discussed before. All right, next on the list is Hyperliquid. This is another coin that I don't hold much of right now, but I think if you were coming into crypto from scratch or you're building a portfolio, it's pretty hard to ignore how the hype chart looks against Bitcoin and Ethereum. It's also hard to ignore how it's actually held up despite a lot of perp dexes recently having big sell-offs. Obviously, it's due to the flywheel that they have. The more people that trade on the platform, the more fees they make, the more that they buy back. And there's this kind of, really strong feedback loop, which keeps pushing the token to the upside. So I think it's a decent one to hold, trade, position in. It definitely deserves a place in this video, even though I don't hold much of it, because I think Hyperliquid is the proven dex in the market. The only question mark, and one of the reasons I don't hold like a lot of spot hype and I've mostly been trading it is because I think it is pretty heavily valued. So you can make an argument it's overvalued, but at the same time, it's showing great relative strength. So unless that starts to wane, it's probably going to be a coin that outperforms in the market, hence why it's included here. The next one is Link. Similar story recently. I was invalidated at $20 when it broke down to 19 and held below for a few days. I decided to cut a bit of my exposure, but the chart still looks good overall. And if we break out back above 20, I'll look at repositioning what I sold, but I still have, an underlying position there. You might notice me talking about invalidations and stuff in today's video. Like if you're the average person, you can probably afford to hold these coins and not worry too much about active positioning. However, I like to play the game with a little more risk management baked in just because of what I said earlier. We don't know where we are in the cycle. I think there's more upside for sure, which is why I'm in these coins and have principal exposure. However, I still want to play my downside. So I'm operating in the market with tighter invals and I'm being a lot quicker to take profits or invalidate because I know I can always get back in an uptrend. So I've done other videos on this channel that you can go and check out. If you want my exact framework for invalidating and managing positions, that's what this channel is for. So I won't, double up in today's video, so to speak, but I just want you to know that I'm a pretty active investor. Like I'm not just sitting back and, letting the market do with my portfolio what it will. I'm very much actively managing my positions. And when I notice momentum breaking down, I'll cut positions and then re-add at certain points. But Link is one that I would want to hold. Now, the last one in the majors before we go into the mid caps that I would want to hold, I don't actually hold any right now, but I think it's a very decent option if you are investing in the crypto market, is BNB. BNB has been extremely strong. They have a very strong flywheel with the DAT. I mean, the exchange narrative is very good, right? Because if you buy into an exchange token, by and large, you're getting exposure to the upside of the trading on the platform because the more money they make, the more buybacks they can do. So essentially, it's like a reflexive bet on the market, and Binance is the biggest exchange. Spoiler alert, Bybit's the second biggest exchange. We'll talk about Mantle later in the video. I think that's another option here. But both of these coins give you exposure to the two biggest platforms in crypto. So I think the exchange narrative is one that you can bet on as a pick and shovel. And if you think at any point we're going to get a bigger altcoin run or more trading volume in general, then these coins become decent proxies. So BNB had to be in the video for that reason. All right, now let's get into the mid caps. These are the coins that constitute 20% of my portfolio. As I said earlier, you can tweak this based on your risk tolerance. First one, as I mentioned, is MNT. This is not the official token of Bybit, but it's the closest thing you're going to get. There's a lot of benefits to holding MNT. A lot of the biggest whales on Bybit are incentivized to hold it. They can reduce their trading fees, get really good staking yield and access to new launches. And they've really embedded the MNT token in the ecosystem. It's also a blockchain, so it does have some flows as well. And it has an ecosystem and TVL and dApps built on top of it. So it's the closest thing you are going to get to the Bybit ecosystem. That's why I'm holding it, alongside the fact that it is showing pretty good relative strength on the higher time frames versus Bitcoin and Ethereum. So it has been outperforming. Remember, one of the main things you want to be looking for with altcoins right now are the Bitcoin pairs and the Ethereum pairs. You have to make sure you're holding altcoins which can outperform Ethereum or Bitcoin, and using the charts in order to validate, A, are we in an uptrend? And B, if we're not in an uptrend, is it coming down to a major historical level where you can bid in that zone and potentially have an invalidation to go back into Bitcoin and Ethereum if we break below that zone? Because there are many great altcoins in the market which aren't going to be featured in this video, and it's simply because they don't fully fit the criteria. Like they'll be just bleeding aggressively versus Bitcoin and ETH. So maybe, I've had a full or a partial invalidation on those positions, or I just haven't been interested because they're in a downtrend versus Bitcoin and ETH. There are certainly some exceptions in today's video. Like not every coin is going to look fantastic versus Bitcoin and ETH because it's not a black and white rule, right? There are other factors at play, like your bullishness, the fundamentals, the flows of the coin, which can impact whether you hold them. But definitely, I think looking at the Bitcoin and ETH charts is just a good part of your due diligence process, and it can help you risk manage a position. The next coin, not holding it right now, but I think it would be great in a mid-cap portfolio, is Athena. It's actually dipped over the last week or so. I think it's still going to be one of the top coins in the stablecoin narrative. We've seen some new ones launching, which were looking promising and still could do well, like Plasma and Stable, but they're looking quite weak. Athena is a little bit more proven, and the growth of their stable coin's been fantastic. So I think that's one where it's reflexive to positive funding environments. If you see funding pick back up, there is good reflexivity with the token, and it benefits most in that environment. Of course, recently we've had a negative funding or a neutral funding environment because the market, flipped short or has flipped a bit more bearish, which has put a bit more pressure on the token alongside its unlocks. That's the only thing about ENA. I love trading it though, because when it goes up, it pumps really hard. And if we get a big run and Bitcoin goes to new highs and funding ticks positive, it can run really, really hard. So having some base exposure to ENA and then also having some trading exposure or looking to trade in and out of the token, I think are really good moves because it should run, really hard when it runs. The next token I would like to mention, this is a true mid cap because those two you could argue are large caps, but I wanted to spread out the video properly to give you an idea of allocations, is Aethia. So the reason I'm holding Aethia is because it's an AI bet. Of course, there are other ones like Tau and WorldCoin. They're definitely good ones to hold as well. I actually still hold some Tau ahead of the halving. That's going to be, I think, in 40 to 50 days. WorldCoin I like as well because it's basically the only liquid bet to OpenAI until they IPO, which there's rumors they're going to IPO in the next year or so. But until then, it's the main proxy, and I do like the narrative on the WorldCoin side. But alongside those two, the mid cap that I would probably select in AI is Aethia. It's actually down a lot over the past couple of weeks, but the fundamentals are probably more bullish than ever. So I cut my position, and I recently posted in my Discord that I had re-added a chunk of my position, buying back lower because I think the risk reward here is actually much better than what it was. They've got a very interesting flywheel coming with the DAT. They've got lots of enterprise activity and lots of clients working with them, and probably lots of clients that will continue to work with them. So expect more news on the Aethia side because they're an interesting project, because although they launched a token in crypto, and I think that's the very efficient mechanic to incentivize a community and raise liquidity, they very much have big ties to the traditional AI world. They have huge piles of enterprise compute, and this is attractive not just for crypto companies, but to anyone looking for cheap compute. And I think you're going to see with the new DAT, lots of interest coming for the project, not just the crypto side, but also the treasury side. So it's a very interesting project for that reason, and it's one of, I guess, my higher risk bets in AI. Even though it's not a high risk token in terms of market cap, it's naturally going to be riskier than a Tau, but also offers genuine upside. Like, it's going to be hard for Tau to 3x. I could see this 3xing in a matter of weeks if the market aligns. So that's why I hold that. Going on to some of the other mid caps that I hold. Now let's get into the DeFi category. There are probably three. The first one is EIGEN. It's good because it's an ETH beta. So if ETH runs, you should see it do well. That's what happened during the last run. It went from like $1 to $2 really quickly. But they're also building technology and infrastructure for X402. It's a new AI payment standard, which has been really hot. So you're kind of getting a dual narrative there. And they've also got infrastructure for restaking, which in the right environment is, I think, a really bullish thing for the flows of the token. Obviously, recently, the market's been a bit shaky, but I still think if you want to hold an ETH beta, and it's good to have one or two in your portfolio, this one's quite strong, as it has the dual narrative going on as well. The other two that I think are interesting are PENDLE and Fluid. These two are genuine DeFi plays. They do different things. I won't get too technical in today's video, but basically PENDLE is a RWA play and an interest play. You can split the interest and the principal of an asset, which gives you lots of flexibility on chain, lots of whales and people interested in DeFi. Really enjoy PENDLE, and I've used many of their pools. Also great for farming airdrops across the space. So there's a bit of stickiness there in terms of liquidity. And then Fluid I really like in terms of their revenue model, and they're a lot more efficient than similar protocols. So those two I've done a lot of trading in and out of, but I do hold a principal bag of Fluid because I think it'll do well, and PENDLE's another one that you can look at in that space as well. All right, now let's get into the low caps. These constitute the final 10% of my portfolio. Look, you can make this number a lot higher. What I do is I kind of separate my core portfolio from my liquidity portfolio. So right now I'm actually 50% stables. Once again, for the average person, probably too aggressive, but for the way that I trade and I like to do things, I feel a bit more comfortable operating in that space. So the way I think about it is this portfolio I'm sharing today sits adjacently to my stablecoin portion of my portfolio. So this portfolio would constitute 50%, and then my stables would constitute another 50%. But obviously, if you were a little bit less risk off, and I'm not risk off, I've gone to other videos as to why I'm risk off. It's not because I am like really bearish or anything. It's because I have just found that I'm a better trader, and even in good markets, when I have more liquidity. For example, during the big liquidation event on October 10th, overall I lost money because of how it impacted my spot portfolio. But on the day I actually made money because I had a lot of limit orders on exchanges, which were filled, and then we got a pretty quick reversal to the upside. And I've found this across the market in general. Like, if you have liquidity, there are so many opportunities on liquidation events. Even if you wait for a confirmation, you can play breakout trades. You just have a lot of flexibility. I can invest in ICOs or new rounds if they come across. So I just prefer operating in that space instead of like constantly having to sell positions at inopportune times in order to fund certain trades. So that's the only reason I'm doing it. If you aren't operating like that, and if you are more of, a set and forget type investor, yeah, you could probably hold 20 to 30% stables. I still wouldn't recommend going too much lower, and this will become evident towards the end of the video where we talk about pre-TGE projects, because you do need some flexibility to trade. Even if it's just airdrop farming, like for example, Multiply, which I'll mention later in the video, I've parked some of my stables there to airdrop farm. If I was only 10% stables, how on earth am I going to airdrop farm, incentive farm, and have enough liquidity for the trading that I do? It just doesn't make sense. So that's why I'm 50-50, a bit of a quick rundown on that. But now let's get into the small caps. 10% relative to the token side of the portfolio. Once again, number could be a lot higher, but you can adjust that as you wish. So I'm not going to mention that many specific low caps in today's video just because it changes a lot. Like the way that I play the low cap game is very much spray and pray. Like that core portion of my portfolio, which we've discussed, like large and mid caps, you don't really want to hold too many tokens. Like if anything, you could condense that down and just pick your favorite 5 and just hold that. Then you're managing less positions. You can be a bit more cognizant of invalidations. You can stay up to date with news and fundamental catalysts, but you're not managing so much that it becomes, a big headache. With low caps, I kind of trade a bit differently. I spray and pray a little bit more. I give myself a bit more flexibility to round trip positions because it's only 10% of my portfolio. And if it includes stablecoins, it's only 5% of my portfolio. So I'm able to take more risks with that portion. But I'll tell you the sectors that I'm looking into. The first sector is prediction markets. I think prediction markets are going to be a massive trend. The polymarket TGE is coming very soon alongside obviously Kalshi. These are the big plays, but there's a lot of underlying infrastructure. I'm not positioned in anything yet, but that's something that you can definitely look into. Number 2, where I am more positioned in because I think there are more obvious proxies, is AI. There are a few plays under this sector. Like I can name a few, like Cookie's interesting because of the way that they have their mechanics with InfoFi. So you actually need, in order to get allocations, you need to commit some capital, and you obviously need to create social capital through posting. That mechanism I think is better than a lot of the competitors like Kaito, and they continue to get traction, and we see new teams want to market through products like Cookie. I think it's also appealing for retail. Like if AI ever comes back, and the X402 narrative has certainly been a hot narrative over the past week, and it's started to remind people that agents are going to be a thing. That Coinbase announced for agent to agent stablecoin transfers, I think that's going to be huge for the space longer term and just facilitate more AI usage and adoption. So overall, I think it's going to be good for the narrative. So Cookie's one of them. But there are many more AI plays that I'm going to get to some soon that are pre-TGE because I think a lot of the good stuff hasn't launched. You've got tools like Anon, which is, if you're a trader, investor, going to be kind of a companion for you to be able to, chart. You have the overlays on the chart, which is really cool. You have prompting through Gemma to get information. I think this sort of stuff, I think a lot of people aren't even using AI yet, but once you start using it, you realize that it could be a huge tool. So once people become more comfortable with it, products like this, I think, could do quite well. But there's a ton more, like robotics. There's a ton of low caps that I'm researching right now, a couple that are positioned in that I'll probably speak about on my main channel. That's quite an interesting vertical to look into. Obviously, we had that new Neo robot be announced. It had lots of hype. I think robotics are a little bit less obvious in the immediate term. Like, of course, you've got players like Peak Network, which are a little bit broader in terms of the DePIN/robotics economy. But I think the agent plays and the broader AI narrative in general is a little bit easier to invest into. It's also one of the reasons why I picked ETH here, because it's a GPU play. And what does AI need? It needs GPUs. And that's one of the reasons why NVIDIA has been so successful as a pick and shovel, because you don't need to pick the exact LLM or model or network which succeeds. You can just bet on infrastructure overall, and AI has, enterprise infrastructure. So those are some that I'm looking at. So we've got prediction markets, AI, robotics. I think there are also interesting plays across RWA, tokenization, some lower caps with interesting flywheels. Pretty much the way you've got to think about this lower cap portfolio is less about charting. So there's this temptation to chart. You can have support and resistance and have invalidations, of course, but charting versus Bitcoin, ETH, and being like, that doesn't really work as well for the low caps. What's better is identifying narrative and attention flow. The market is all about attention. Tokens are just reflective of attention and flows. Are people investing and interested in the token? Thus, price will go up. So that's what you really want to focus on when it comes to low caps. All right, now let's get into pre-TGE. These are the tokens which haven't launched yet. So by no means am I condoning you to buy these tokens. You couldn't even physically buy them if you tried, but let's say the video comes out and some of these tokens have launched. I'm not saying buy them right now because I haven't even bought them right now. Some of these I'm invested in. We always have disclosures in the description in early stage rounds, but I haven't added liquid exposure yet, obviously because I can't. I may end up doing that though. For full transparency, a lot of my investment rounds have vesting or locked exposure, so a lot of the time it makes sense for me to also trade the liquid markets when the token launches so I can get more exposure and trade the interim. So I think this will be a space where I get really active in as some of these tokens launch. The first two, which are the closest to TGE, are PIEVERSE and Momentum. In fact, you might be watching this and they've already launched because I think these are literally going to be within the next week. PIEVERSE follows the X402 narrative. They're one of the tokens building infrastructure for payments using X402 in the Binance ecosystem. Interestingly, CZ actually follows them on X, and they also did a Binance wallet listing, so potentially a Binance listing could be coming. Obviously, we'll know more details over the next few weeks. The next one that I like that is going to launch very soon, maybe launch by the time you're watching this video, is Momentum. The token is MMT. They're the biggest DEX on Sui, but I think they can be a lot bigger than the Sui ecosystem long term due to their incentive model. And I think an interesting play is not only the token, if it gives you an opportunity to get in at a good price and a good valuation, it also could be playing the ecosystem. I think there'll be a lot of staking opportunities with the VE rewards. Like personally, I'm locking a lot of my MMT because I want rewards for it. So I think that side of the ecosystem could be even more interesting than the underlying token itself. And it's definitely something to look into because if you're bullish on Sui, it's not on this list, but it is an L1 because I wanted this list to be short, right? It is an L1 that I'd probably pick next after Solana as my next layer 1 play. This, I've already got a lot of exposure to it through Momentum. So that's the way I'm getting exposure to Sui. Kind of a dual threat because if Sui does well and there's lots of trading, Momentum's the leading DEX, but then also it could go onto other chains and do other things and I could have some other benefits, auxiliary benefits beyond the Sui ecosystem. So I think risk reward could be quite decent there. Now let's get into some that are probably launching soon, but aren't as immediate. I've got a couple of AI ones. The first project is Fraction AI. I'm also an investor here. This allows you to build your own self-evolving AI agents. It's an auto training platform, so the agents actually get smarter over time and learn from themselves, which I think is cool functionality. They have a lot of very big backers. So that's going to be an interesting one that is going to launch soon. The next one is Sentient. I think you're going to hear the AGI narrative ramping up a lot. I know Sam Altman is targeting AGI within the next couple of years. AGI, which is artificial general intelligence, is the point where AI actually becomes smarter than a human, possesses the capability to do tasks better than a human and reasoning better than a human. We're not that far away from it. I think it's going to be a big narrative. And we know that narrative controls flows in crypto. Probably the leading player I've seen building in this space directly is Sentient. They've also got massive backers and they're building open source AGI. So they should be the leading play for decentralized artificial general intelligence. Essentially how they're doing it is they're building Grid, which is the largest network of decentralized AI. So keep your eye out for that one. I think Sandeep is also the co-founder who was the founder of Polygon. So some big names are also behind it. And I'm also an investor there. Heading on to a couple of DeFi protocols now. The first one I want to highlight is MULTIPLI.FI. This is the one that I mentioned earlier in the video that I'm staking some liquidity there for X tokens, which is helping me earn orbs. There are also some social tasks that you can complete to earn orbs, which will help you get access to an airdrop. The team behind this are really, really smart, super smart people, and they're basically enabling all sorts of yield on assets that typically you wouldn't be able to earn yield on. So some very smart DeFi mechanics enabling you to earn yield on RWAs like gold, for example, treasury yields, etc. And obviously they have the ability to earn yield on stablecoins right now, where I'm earning about, I think, 7% at the moment, which is decent, but combined with the fact I'll get an airdrop, it could be 15 to 20% in the real percentage or more that I'm earning off staking right now. So Multiply is one to look out for on the liquid market when it launches, but it's good because in the interim, you can look at staking to potentially earn an airdrop. And then the other one that is launching that I'm interested in is Arch Network. Arch Network is an ecosystem which is making Bitcoin programmable. So you can build dApps, you can facilitate payments all on Bitcoin as a settlement layer. This has been a sector which I've been really bullish on for multiple years. Like Bitcoin is huge. Imagine if you could unlock that audience and the security of Bitcoin being proof of work. No one has really managed to do it. You've had Stacks as an L2, but no one has really nailed it. I think Arch Network, based on the conversations I've had with the team, based on people that I know, is potentially going to be the leader in that space. Of course, no one's done it yet, so we haven't seen it, but they do have the big backers like Pantera. They have big backers. I mean, Multicoin was behind Solana's ascent. So I think they have a real shot at doing it, which is why you should definitely have your eye on it. Remember, with all of these pre-TGE projects, there are, I'm not just saying ape the tokens when they launch. There are airdrop opportunities. There are incentive opportunities. There are liquid opportunities for trading the tokens. What I would do is create an X list, add all the upcoming projects to your X list, and just scroll through it every day or every few days or once a week, whenever you want, and just get a feeling for what's happening and when, because there are so many things that, slip by people's radar. Like they'll do NFT campaigns. Some of these projects have free mints, like all this sort of stuff, which could qualify you for an airdrop down the track. Join their Discord, get involved, find out what they're doing. Because if you're just an active community member, that is the best way to get exposure to rewards. So I think pre-TGE is something that a lot of people ignore, but if you put a lot of effort into these projects, you're going to find them before anyone else. And then you won't be scrambling when they launch. You'll already have a plan. You already know what valuation you're targeting. If they're under the valuation you're targeting based on comparables, there could be a potential discrepancy or dislocation play for you to make money on the liquid market. That's something I'm doing alongside the incentives market. So that is my portfolio overall. Just some housekeeping things. 1, remember I have invalidations. 2, remember that I don't hold every single one of these tokens, to their full exposure right now. There have been some instances of whether I've cut positions and I'll look to re-add on confirmation. And 3, remember I'm holding some, stable coins on the side. So factor that into your equations here. Obviously, your strategy and your risk tolerance and how you approach the market will dictate exactly how you expose yourself to the market. Let me know what you think of this portfolio in the comments below. And did I miss any tokens? Was there a token that is glaringly obvious that you're holding that wasn't mentioned in this video? There are definitely tokens that I didn't mention, but I wanted to, make it concise for you today. There are some tokens that I even hold that I just thought would bloat the video too much. I wanted to give you the main ones today. But if there's anything I missed that you hold, maybe you could put me on game. Maybe there's a project you could share with me in the comments and my team can research it further. So let me know. Hope you enjoyed the video. Make sure to subscribe if you're not already subscribed. Turn on notifications. Remember, it is a new channel, so you want to be a part of the community here so you can get more videos like this. And I'll see you in the next video here on the Crypto Edge. See you later, guys. Peace out.